much for joining us, Mike. So what are your clients telling you? Are they mostly short, long?
This gold decline has caught an awful lot of people out, and it's certainly caught the majority of our clients out. A week ago they were about 77% long of gold, and I think when you actually look at the decline, I think the key level for me was the 1500 level, which we broke a few weeks ago, and that's when I started to turn decidedly bearish on the yellow metal. And I think Bernanke's comments last week were really sort of the final nail in the coffin, and obviously the downgrades that we saw on Tuesday from a various number of investment banks.
So where's the smart money heading? I guess veering short.
Yeah, the smart money is now starting to turn a little bit shorter than it was initially. Our clients are now 58% short, 42% long. It's going to be a slow process. Obviously earlier this week we saw CME raise their margins ever so slightly, and I think with every piece of good US economic data, I think the sell-off is likely to get worse, and we could well be targeting 1150, which is a 61.8 Fibonacci retracement level from the 2008 lows at 680 to the all-time highs that we saw at 1920.
What happens after 1150? How low could we go?
Well, I mean, I'm targeting the 2010 lows if we break 1150, and that's by no means certain. We could actually get a deterioration in US economic data, but the $1,000 mark, nice round number.
Okay, so that's gold. Let's move on to silver now, because silver's taken a battering as well. It's, once we hit the $20 mark, where could we go after that?
Well, obviously we're already below that now, and it's a similar sort of story to gold, really, with the added problem is that silver is also an industrial metal, and the problems in China have exacerbated the sell-off that we've seen in silver. The gold-silver ratio is around about $66, and that's the highest level it's been since 2010, and a lot of people have been caught the wrong side of that. Our clients are looking around about 80% long of silver, even now after the sell-off that we've seen. So I certainly think that gold-silver ratio could widen out even further, and we could see around about $17, which is the late 2010 lows on the silver price.